hello everyone. How you guys doing? By the way, can you guys hear me clearly? Can you guys hear me? No? Good day to you. Can you hear me, Jamiru? Hi Ajay, can you hear me? Okay, sound good. All right. Okay. I thought you guys cannot hear me. Okay, how you guys doing? Okay. While we are waiting for everyone to tune in, okay, maybe have a chit chat. Just now I was looking at gold. Okay, so basically I was like waiting to buy gold. Okay, while we are waiting for everyone to tune in, okay. Alright, just talk about gold a little bit. So this is my first support or demand. Okay, it's good. You can see that this zoom into like F15 price falling, okay, and then rising more than 100 pip. Okay, I think it's about more than 150 pip, and then falling. Okay, I was waiting to like this level since, you know, price at the resistance here since the beginning of the week, right? And price is falling, so we're waiting to buy the support here, and then you can see the rejection. Okay, the reason why price is falling, there's a divergence here as well. Okay, and this is my sell entry for the lower time frame. Okay, you are doing good. Okay, Ajay, all right. Maybe after we finish the webinar, we will look maybe for gold, maybe direction tonight. Okay. Okay, so today basically we will talk about risk management and trading psychology. I will just touch on a little bit on trading psychology. You will see here I found this quote is very, you know, quite useful. They say that the key to trading success is emotional discipline. Okay, if intelligence were the key, there would be a lot more people making money trading, right? Are you agree with me? Yes, right? So if you're a millionaire, okay, if you're not disciplined, 1 million or 2 million, okay, oof, I mean, like, you could lose everything. So basically, what I want to do now. Hang on. Okay, so again guys, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. So today, like I just mentioned, we're going to talk about risk management and touch on a little bit on trading psychologies. Okay, and before we start the webinar, disclaimer first. All right, this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation. Okay, and risk warning over here. We really know that trading forex and CFD carries a high level of risk to your capital, and you should only trade with money you can afford to lose. All right. Okay, and trading forex and CFD may not suitable for all investors. Okay, so introducing your host today. My name is Peggy. So basically, you will see me every Tuesday. And if I'm on leave, that will be my colleague cover. And Monday for live trading section, you will see Crescenda. Okay, so about myself, my name is Peggy. I'm an investment analyst and a prop traders. Okay, so this is the agenda for today, which we're going to talk about position sizing, risk and reward ratios, psychology for discipline trading, and touch on live example. So basically today is just, you know, easy topic. I think suitable for the beginner and even though you are experienced trader as well. Okay, just a recap. So what is position sizing? Okay, so position sizing meaning that it determines how many capital you allocate to each trade based on your risk tolerance and account size. Okay, and key principle: never risk more than 1 to 2% per trade. You can check with me as well how many percent you risk per trade. Okay, And of course, large account equal to larger position sizes. Okay, high probability setup equal to slightly larger size. So if your account size is only 500 or 1,000 US dollar, and then you put one lot for gold, that is considered your over trading. Okay, so sometimes if you see those influencers, okay, or those online, they put like maybe 100 lot size. Either they have a larger account size, either they are using a demo account, or either they have unlimited leverage, either one of them. Okay, and volatile market equal to smaller position sizes, meaning if you want to trade during the high impact news, which is those non-farm payrolls, right, you should reduce your position size, your lot size. Let's say like normal market condition, you put one lot size for gold, but if you want to trade during high impact news, you just reduce to 0.2 or 0.5. Okay, usually you want to trade during high impact news, I have separate account and my lot size is smaller. Okay, and how you need to calculate position size is equal to account risk percentage multiplied by account size divided by stop loss distance. Okay, this is example. Okay, for the GBPUSD. Okay, I'm going to use example for minute lot. Okay. Hello to you too. Okay, for example, your account size is $1,000. Risk per trade, we risk 2%, meaning that trade we're going to use is only $200 per trade. Okay, and stop loss, we're going to put 50 pip, and the pip value is $1. Okay, meaning that position size, you take $200 risk per trade, divide by 50 pip multiplied by $1 per pip equal to 4 minute lot size, meaning that you can put 4 minute lot size to trade GBP to risk 2%. Okay. We are aggressive. Nice, thank you. Okay, so this position sizing rules. Okay, so let's say your account size is at $1,000 to $5,000. Okay, make risk per trade, you can use like maybe 1%. This is just the idea. Okay, it's not like you might or you have, this is just the ideas only. Okay, make the risk 3%. These are the kind of strategies suitable for conservative trader, like conservative, like we wait for confirmation. That's why I consider myself conservative trader. Okay, aggressive trader, meaning that price coming to the zone, you just enter without wait for confirmation. Okay, that aggressive trader. Okay, 5,000 to 25K. Okay, maybe you make risk protect 1 to 2%, make the risk could be 5%. This is moderate. Okay, and maybe your account is bigger, 25 and above, risk per trade 2%, make daily risk 6%. Okay, I will look for that later. Go US 100 and BTC. Okay, so now moving on to position sizing rules. Okay, let's say scale into position, enter 1.3 at the entry, or you can use like 1 out of 3 on the pullback or 1 out of 3 on the breakout. Okay, correlations awareness, don't risk 2% on 5 correlated trade, effectively 10% risk. Okay, market condition I just mentioned, reduce size during high volatility period, win and loss stack, slightly reduce size after losses, maintain size after win. So that's the reason why I don't like to scale my account. For example, you will say that some of them say that, or you have seen, okay, from let's just say $100 account to 1,000 or a road to 1,000 to $1 million. Okay, so basically like they keep grow your account. So basically, let's say you started with 1,000, and then you want to grow your account, for example, to 5,000. Okay, you can do that if you are disciplined. Then you need to maintain your lot size. For example, started we are very disciplined. Okay, based on my experience, okay, I was very disciplined. So every time I trade gold, I never put more than 0.5, or max never ever go beyond one lot for $1,000 account. My account goes from 1,000 to 2 to 3K. Okay, I start to have, you know, oh, I have a bigger account, so my lot size from 0.5, I go beyond one lot size. Okay, one lot. Okay, and after that, your account give it one lot end up, I lose my profit sometime, because sometimes market is not on our favor, right? I lose my profit, end up I lose my capital. So from that on, I don't like to grow my account. What I'm doing now, if I trade with 1,000 account, I aim for, let's just say, $100. $100, either I withdraw or I allocate to another account. So basically, let's, for example, I see market, you can have more than one account. I have one account, okay, and I open another one account. So whenever I earn from this one, the profit I transfer to this account, right? After that, you can withdraw $200, $500 to use that money to reward yourself, because if you never have the habit of withdraw, you only like deposit on it, end up you may lose your capital $1,000. So I don't like to have that kind of mindset, like, you know, grow account from 1,000 to 5,000, because end up you will lose yourself. At the beginning, we very disciplined, but along the way you kind of like, you know, have a greed, you want to earn more, the loss size will be getting bigger. That's why they say that slightly reduce your losses after losses. No, sometime after losses, I want to have a leeway trading. Okay, what I do, I double loss size, just want to cover quickly, end up I lose everything. Even though, like, after you win the trade, you should just maintain your position. Okay, like for example 0.5, you just put 0.5 for the entire, you know, trade. Also up to you, but no, I believe that some of you guys also like went through, or I just said, okay, but yeah. But if you think you are very disciplined, you want to grow your account from, you know, 1,000 or 5,000 to 10,000, that is possible as well. Okay, now I'm going to talk about risk and reward ratios. Okay, understand RR, just short form RR, it stands for risk and reward. Okay, so basically they are compare potential loss to potential profit for each trade. Okay, so you just take potential profit divided by potential losses. Okay, this is just the idea, okay, for minimum ratio by win rate. Okay, if you want to get 30% win rate, you need 3 to 1 risk and reward. 40%, you need 2 to 1 risk and reward. 50%, 1 to 1. 60% win rate, can use 1, sometimes 1.5. okay, this is just for example, but this one you might be a bit confused. So basically, I think this might be confused. I just don't show this one, but I will show you the chart right here for just for example, because nowadays you don't need to like calculate anymore, right? On a trading view with IC market, now you already trade, you can trade with you already can trade on a trading view if you have the account with IC market. For example, we already know that. Okay, let's just say you want to go long, for example, right at this level, right? Let's say you just look here, risk and reward. For example, if I want to risk the amounts over here, let's say I want to risk like over here, for example, right? If you just aim for somewhere like this high, and I'm gonna buy at this level, for example, at the what we're going to buy at this support level. right? And the stop loss I will put below this swing low. Okay, not this swing, I will put like slightly like below this swing low. And we're going to aim for, if you want to aim for 1-to-1, which is look here, either I aim here, you will get 1 to 1.45 risk and reward. Either you want to get higher, this is how many percent? It's like 3 risk and reward, 1 to 3. Okay, so basically, you like trading wheel, gonna have account with IC market, and then you can trade on a trading wheel. What you can do, you know, right? You go to a trading panel, and then you just you know, log into your IC market account. I think you need to have C trader, right? You need to have a C trader, and then you can trade on a trading wheel. Okay. Oof, that is why I don't have anything here. There's something wrong. Okay, now I'm going to talk touch on a little bit on trading psychology. Okay, they're gonna be like big 4 psychological challenges. Okay, one is fear. Okay, fear of loss. Okay, so hesitate to enter trade. For example, you know that you already highlight the key level. You know that price is going to, you know, bounce from that levels. For example, you are waiting to buy. For example, here, let's say even okay, based on current price here, we know that price on the bearish because H4 candle is a red, and then you identify to buy in this level, and then you kind of hesitate to buy because it seems like price, okay, have really big selling pressure right here. Sometimes you know that I want to buy here, but when price falling, you may not enter buy right here. You might wait. Then what do you see? Price rising from the first time, go to the zone and rising more than 150 pip. Okay, that's the reason you need to be the confident on your trade setup. If you don't have a confidence, it's okay, you just go for smaller lot size. For example, we know that gold is really volatile. You can just go for 0.02 or 0.01 to test on your own strategy. Once you have confidence, and then you can go for the bigger lot size. Okay, that's the fear of missing out. FOMO trading. Why FOMO trading? For example, we know that, okay, for example, maybe maybe over here, let's just say just for example, okay, let's just say I was waiting to sell at this level. I want to wait for price to pull back. Actually, I wait for it to pull back, but price did not. But then, for example, okay, I want to wait here, but price is falling. But after that, you follow sell because you say, oh, it seems like I'm waiting here, but I have the, you know, the feeling of missing out the trade, so you follow sell. After that, price is what? Rising. It's a pullback. Rising. It pull back to this zone and rising. Either from here you sell, for example, you sell here, price rise here, you might have the floating loss, or you get stop out, or your account is gone. And then when price falling here, you don't have money to trade anymore because either you burn your account, or your margin calling, even though you want to have another trade here, but you cannot. Either you deposit money to maintain your position, or you got like stop out or margin call. I have many multiple margin call last time. Okay, I know that a lot of us have 99.99% have a margin call before. Okay. And after that, what you see, you FOMO. That's why you either you regret, or you just maybe like scolding yourself, right? So solution, systematic approach with predefined rules. So if you want to, I mean, like, you need to be patient. Basically, if you want to sell here, but price did not pull back for you and then rising here, it's okay. If you know, I was waiting for price to pull back, I blew zone again, but price did not pull, but I get buy at this level. I get buy at this level. That is okay. I don't have a sell entry, but I have a buy entry right here. Okay, even though I miss out, okay, but at least my money is still there, okay, and I have the another entry buy here, okay. So that's why you should have like second plan. If you want to look for the sale here, but if not, what another trade setup you can use, okay. The reason I buy here because this is like, you know, demand for me, okay. That's why price rising is about more than 150 pip, okay. That is good enough for gold already. Greed, over trading, taking too many position. You know why? I know that a lot of us like to have layer in zone, okay, especially gold, right? You know, sometimes even though let's say I can risk one lot size, right, and when the price rising, maybe I put like 0.1 lot, but then you know you have so multiple entry here, just click. Sometimes price rising a little bit more, you might burn the account because sometimes you don't know how many lot size you trade already. You just click based on 0.1, you just click, okay. It's because you're taking too many position, okay. So you shouldn't let it taking too many position. You can, if you can take risk, okay. In future webinar, can you do candlestick pattern please? Yes, I did that before, but don't worry, I will do that again. And candlestick pattern is really powerful in forex trading as well. You can use candlestick pattern to confirm your entry, okay. And over leveraging position size too large. Either you, when you open the account, I know that for IC market they only give you leverage 500. Some brokers they give you 1,000, some 2,000, some is unlimited leverage. There will be pro and con for leverage as well, okay. So you have just be careful on that, okay. But for professional trader, okay, I know one of them they only use like 1 to 50 only, and their account size is bigger than mine. I still use 1 to 500, and some I use 1 to 1,000. I still use that. But some of the people I know, the professional one, they use 1 to 50 only, and their account is much bigger than myself, okay. And the solution, stick to position sizing rules, okay. I already teach you how to calculate. And revenge trading, okay, chasing losses, bigger position after loss of shit. I just explained, I did that before. So emotional decision, abandoning strategy. So whenever we lost, right, we lose the trade, what do you feel? You feel anger, okay, you feel like frustrated. I feel like, okay, I want to like win back whatever I just lost just now. What you need to do, you set the daily loss limit, cooling off period. So nowadays, whenever I hit stop loss, I just close everything. I mean, tomorrow I come back again. Then I have a sell talk. You know, sometimes whenever you hit the stop loss, let's say like you lost 1K or 100, depending on your account size, or 500. If you want to have revenge trading, you need to have a sell talk. You need to talk yourself, hey, are you okay? Are you okay to trade now? What if, you might say, what if I enter now and then I lose again 1,000 or $100? Are you okay with that? If you can answer yourself you're not okay with that, you're not going to trade. Tomorrow you come back. And then you need to always tell yourself that Forex is for you 24/7. If you trade BTC over the weekend, right? Forex is for you 24/7. There's so many money out there. Doesn't mean like if you trade today, tomorrow is no Forex, right? So tomorrow you can go back and trade again. You should have a self-talk, okay? If you want to be a successful trader, self-talk is important. Talk to yourself, okay? What is the reason the first time you know the Forex, and then we want to go into the Forex market because we just want to have additional income, right? But whenever we stay in the Forex for too long, and then you start to have greed. Because why? If you like to stay on the social media, you know that there are so many people showing you that they turn account from $100 to 1,000 or 1,000 to $1 million. Try not to get, like, you know, rule for that kind of like the mindset, okay? Usually nowadays I don't follow any like trade signal anymore. If I'm happy the profit, I close. Even though I close, price falling another, let's say 100 pip, if I hold the position, I would have earned, let's just say 1,000 or 2,000, but it's okay. I close the position, I earn $100. I'm so happy with $100. This is my additional income, which is I'm still full-time working. I'm working full-time. I still have additional $100. This one, it could cover my lunch already. I'm thankful with $100 that the forex market gives to me. So you need to be thankful to the money as well. Why? Because if you never be thankful, if you never appreciate the money, the forex market that give you the money never come to you. Okay, you might love the money will come back to you. It's same like if you love your wife, you love your girlfriend or boyfriend, they will love you back, right? Okay. Another one, overconfidence. Okay, high stake, increasing risk after winning. Yeah, sometimes you have overconfident. Oh, I have overconfident before, meaning that I like very confident that price is going to fall from this level because I have so many confluences. Okay, then I increase my lot size. Okay, sometimes it works, but sometimes it hits my stop loss because no strategy it can give you 100% win rate. Okay, his stop loss is just normal. Okay, for it as a trader, it's a normal when it hits stop loss. Okay, ignoring rules, this time it's different. Okay, you ignoring whatever rule you set. Solution, consistent position sizing regardless of recent performance, meaning that even though recent performance you grow your account by 10%, 20%, or you down by 2%, 3%, or 5%, you tell yourself that it's okay. Let's say if last week, for example, if last week I down with 5%, I tell myself it's okay. This week I'm gonna slowly earn back. Doesn't mean like within today or within like one day I will earn 5% back. No, slowly I could maybe 1%. If the market is required, okay, sideways, okay, maybe I don't trade. I slowly, get back 1%, 2%, depend on the market want to give me. Sometimes you can't force the market, right? Like for example, you know that the market is sideways, and then you force yourself to enter the trade. Enough, you may lose. Okay, you get what I mean? Continue. Where am I already? Okay, this is going to be the last slide. Okay, now discipline trading framework, trade system, triggers, wait for setup to appear. No setup, no trade. Tell yourself this is your rules. No setup, no trade. Okay, and action, execute the trade plan. No hesitation, no second guessing. We trade, don't guess. Okay, don't trade by feeling. Okay, like you feel like price is going to fall now or price going to rising from this support. No, okay, don't trade with feeling or guessing. Okay, evaluate, review trade performance. You do that? Did you do that? Did you guys do that? Yes, I did. For example, if I hit a stop loss, I will sit back and flashback why I hit a stop loss. Then I know the recent trade last week, I got his stop loss for gold. Actually, price is already falling. Okay, and I did not close the trade. Okay, I kind of like set the take profit already, and I did not chip my stop loss to to break even to protect my capital. I just feel like okay, now I go by feeling. I just feel okay, I think price could go even lower, so I reset my take profits slightly like lower, and in our price is reward and hit my stop loss. Okay, and learn from both win and losses. Okay, risk, define stop loss before entry. So whenever you want to trade, you should already first thing in your mind, you need to ask yourself, if you want to put like buy or sell now, where is your stop loss? Ask yourself where your stop loss before you put your take profit. Okay, and calculate position size. And this one nowadays, right, you need to like manually count your lot size. Either you can use the EA. Okay, those like trade assistant, they can just help you. For example, for MT4 MT5, I know there is a trade assistant For example, if you want to risk either by percentage on your account or you want to risk by the dollar. For example, if this trade I want to risk $100, they will help you to calculate how many lots you can go for. Let's just say $100 for this trade. Okay, they have an EA. Maybe you can Google it, because I'm using that as well, because I don't want to count. I know that I want to risk 1,000 for example, and then they will just help me to calculate how many lot size I can go for it. If you want to put here stop loss here, my take profit here, how much my lot size I can go with 1,000 risk per trade. Okay, and discipline. Okay, stick to your stop loss. Okay, this is quite important as well. I know that, and even I used to. I know that, okay, I enter here. Let's just say I sell. Let's just say I go sell. Okay, price going around because sell. This is my stop loss. Let's just say my stop is sell. Stop loss here, and now price rising. My stop loss here. I change my stop loss, keep moving up, right? Because you know price rising, price end up burn the account. Okay, I can say like that. Like I kind of smiling when I say like that, right? But back then it was very stressful, guys. You know, when you know you kind of move your stop loss and then you just hoping that price is going to like revert, but end up price also still hit my stop loss. And after I hit the stop already, what do I feel? I just feel like, oh, like I shouldn't I shouldn't have, you know, moved my stop loss. For example, here 500, right? And then keep moving, hit another from here, become 1,000. Okay, I can say that because that was a part. I can say it's like really like smiley face, but back then it was very stressful. Okay, of course, trading, I know that some of the traders told me that trading is very stressful. I somehow agree with the guy who, like, you know, talked to me personally. When I was new to the market, I feel that trading is very stressful. It takes me a lot of time because one, I don't have enough knowledge. Okay, I don't know why I buy and sell here. I know maybe slightly here and there, but not 100% I know how to read market structure. But one, you study, you learn by yourself, you look at the charts like every day, you absorb everything, and after that you just realize that trading is quite easy. Okay, to me it's easy. Okay, because I know what I want to buy or sell at this level or this zone. Okay, I know how to look at market structures, I know how to read the candle, like so many strategy. And again, I know that some of you guys will say that or some of the people, they say that you shouldn't learn so many strategy because they will kind of like conflict each other. To me, I kind of like disagree, because I learn all the strategy out there. That's why I can share with you guys, you know, because sometimes the market condition may require different strategy. For example, even though I identify here is my support level, I just put my support level, but the reason I buy from this level, okay, is not as a support. This is my demand, rally based rally. Okay, another strategy, okay, I also have come in is your price action. Some of you guys just now asked me to for the future webinar, can you just teach the candlestick pattern? Yes, this is your price action. You must know how to read your candle stick as well. You can see the price come for the first time. You can see the rejection right here, right? You can see the rejection, right? Then you trade. To me, you can just, if you love study, okay, if you love study, if you love like learning something, if you have time, just go and study, and then maybe you just pick one. Okay, for example, I know that the elliott wave here, just a simple count elevate. I'm not expert on elevate, but I know like the basic one. I will count 1 2 maybe 3 4 and 5, finish. And over here also in line with my resistance level, right? And what we have, we also have the channel trend line here. Okay, that's why the reason we sell. And over here, if you don't know about ELV, it's okay. The reason you sell here, why? That is your extension, right? There is an extension right here. Do you see that price is touching your extension 127? Okay, and then now, okay, if you don't, you see, this is your extension. That's why we sell. You can see that your sell zone, right? You sell here, and in line with your resistance level, and this is the zone. This is your sell. So to me, I'm quite like disagree with like, you know, don't like learn mini strategy, they will conflict each other. No, it's not. Okay, it's not, because depend. If you trade on H4, I have another divergence here. I will tell you already that price going to fall at least somewhere around this level. Pull back, another like supply zone here, drop bit, drop, right? You sell another like when the price pull back there. But if I trade on the smaller time frame, for example M15, so for M15, what you need to do, you must know how to look at market structure, right? To find the market structure shift, or find you look for chain of character in the lower time frame. If price at your key level, and then you sell. Like you wait for the pullback and then you sell. Okay, if you love learning, just go and learn. Okay, take profit at target. I just told last week I moved my take profit there, why enough I hit stop loss. Another lesson learned as well last week, you know. And the last one, systematic, repeat the process, consistency over perfection. Okay, consistency over perfection. So if your win rate 80 to 85%, to me for the forex, that is good enough. Okay, sometimes hit stop loss, that is okay. It's just part of the trading. Okay, all right, that should be last slide before I end the webinars. Okay, so what time is it? Okay, we still have, so psychology check. Okay, before entering a trade, you ask yourself first, am I following my rules? Enter signal confirm. If say yes, position size correct, yes. Stop loss set, yes. Target defined, yes. Ready to execute. Okay, so every time I will say that I will highlight the key level, wait for the confirmation. Whenever I say wait for confirmation, meaning that price approach the key level, you go down to the lower time frame, you look for the price action, chart pattern, divergence, any kind of reversal, or like any like confirmation, and then you just buy or sell. Okay, I like to wait for confirmation so I can have very tight stop loss with the bigger lot size. Okay, so that should be all for today, guys, for the section today. I hope you guys learning something. Okay, and let me bring you back to the first slide before I end the webinar, and then we will look for the trade setup. I like this quote. Okay, I like this one. Okay, now so for you guys to request, okay, trading must say gold US 100. Okay, shall we just look? You're welcome. Okay, first of all, let me go on a higher time frame for you. Okay, it is very obviously that price is on uptrend. Okay, definitely gold is a safe haven. We will always expensive. I mean, like, if gold is been never like, you know, cheap for gold, right? Any one of you guys buy at 1,000. I don't think we will see gold at 2,000 anymore, right? Last, when was that? The year I saw gold went down to 1,006. Okay, and now like from there 2 years ago. Is it like trading is about 2000, but I don't think it's anymore. We're not going to see gold anyway. So I'm at the okay, monthly obviously on uptrend. Okay, 1 2 3 go. Weekly, okay, to me based on weekly time frame, I still think that gold will be pullback. Okay, this is for swing trade. The reason I saw the price action here, okay, gold will be pullback. Like maybe we just think like as the investor, right? You know, I buy gold, I buy, you know, I keep buying since here, okay, but then I buy, I got no money, I need money, so you need to sell. You need to sell, and then after that maybe you buy back again, right? As an investor. So basically, this is a price action to me. The higher point, the wick. This is the wick and the body. I'll just put like that. Okay, my wick and the body. You can see the weekly candle. Okay, maybe this week, price might ending with red, okay, candle, but we don't know yet because price is still on like haven't closed the week. But what you can see that it's already overbought. Okay, another one. Okay, but I see a price action here for weekly candle. Go daily D1 for the D1 candle. Okay, since here I consider they are like double top side of the reversal, right? You can see that price did not close, the body did not close above the wick around this level. It will start to seem, it kind of like, it seems they make the kind of like the M pattern here, like, you know, wick maybe somewhere around here, right? And over here the neckline, people will sell here, okay. There will be people sell before May 20 price is rising to go to the POI on there. This is like, you know, we trade here because the chart pattern, right? M pattern neckline create the rally drop, red drop, another like supply here. That's why price is falling to come to where, to this support level, and then rising to this POI. Okay, so I think that price still falling based on weekly and D1. You will see the pullback first, and now you will see they also in trend line. Okay, in the trend line here, D1. Okay, now we're moving on to H4. Okay, in H4 time frame, right, Peggy make the lower low, lower high. It is we obviously market structures, right? Higher high, lower high, lower low, lower high, lower low, lower high, right? And what you could see in the belly trend line, or I could just put the channel in the bellish, right? I will do like top-down analysis for you guys. How to change this? Oh, I don't want that. Oh, here, sorry. Okay. Okay, in the bearish, move wing, and price already break below my right. This is my bullish channel. They break below already, right here, and here also in line with the first resistance. There's a resistance with price, and I just show you guys we add in the extension, and of course in this zone also your supply, or you call bearish of the block. Okay, bit in here, but price did not go to otherwise, just touching a little bit the divergence and then falling, because there is a divergence in RSI in H4. Whenever you see the divergence in the lower time frame, higher time frame, it will be powerful. You can just hold. Okay, the price falling. Now I'm not going to buy here again. My key level that I'm looking for is here. This is gonna be my buy entry. I will consider to buy around this level if I see the confirmation. Okay, over here maybe they might have the in line with the Fibonacci 50%, maybe 50. I choose 50 first. 50 slightly 30. Okay, around 38.2%, somewhere around here. Okay, somewhere around here at 38.2. So if there's confirmation, I may consider to buy around this level, which is the price. And now price is still falling, right? You can see that price below 50%, and now toward level 30. Level 30, I think it's gonna be here. If you were to look at the dollar, I think dollar is rising now because they are negative correlation, right? Okay, let me just a quick look on the D1, right? You can see that D1, not D1, is the DXY. This Y is come from where? This is the demand. Actually, this is the demand here. The demand is very big. Okay. Go to H4. Whenever price, now I see the confirmation. Whenever price come to my zone in H4 candle, I see bullish engulfing candle, which is here. I just mark out. I just mark as bearish, bullish on the block. Stand for bullish OB. Okay, you see that this is my confirmation, this candle, right? What do you see? One price come in the box again, OB. You see that you buy here. You see the rejection and price rising. I'll just target for the really easy one, or near one is somewhere around here for like just the first resistance level or the pullback resistance level. Okay, and the price still falling here. I think could slightly fall even more. Okay, let me go to H1. This is already oversold. If I want to do the trade setup based on the H1 time frame for the pullback, this is gonna be the zone for you to buy at 22.95. Okay, let me see. Okay, let me give you the buy entry. This zone. There were two buy entry. This zone and this zone. Okay. It's risky. You want to buy here, you need to wait for price to come in the zone, and then you buy. You see the rejection in the lower time frame, and then you buy. Okay. If you ask me, are you going to? I'm going to follow buy here. No. Okay. I want to wait. Okay. Or you can wait for any reason why I buy here based on the low time frame. What I can say is only like it's oversold for the lower time frame. Okay, if price rising, this going to be your sell zone. Okay, for the M15, I will give you the zone. This zone. Okay, meaning that if price rising here, you're gonna sell. If you can take risk, just go for it. Okay, keep in mind, okay, don't listen to me. If you think you can take risk, you go for it. Or you want to like test out the strategy, just go for 0.01. Yeah, I think price may rise from here or slowing down a little bit because I saw the divergence already here. Bullish divergence at the M15. This around this price, okay? If you want to sell, let me go down to the lower time frame. Okay, not yet. M5 also haven't closed with bullish engulf. Okay, you might need to wait for this candle to close with bullish engulfing candle first. The reason I see here is a divergence here. They might come back to here, and then there's a divergence here, bullish divergence. But if I rising all the way rising, here is your sell entry. I will do M15 trade setup, followed higher time frame. Okay, right here. This is the zone that I already buy, right? This for the first time, price is rising. Oh, okay. Let me see if H4 closing with price action, next candle you buy, you will target here for your buy entry, and then you sell. Okay. H1, or maybe you wait for H1 to close. If this one close with the rejection long wick, okay, next candle you buy, and if you target your stop loss, you put slightly below this wick, or you can hold below this. It's up to you, because depend on your lot size, depend on your account size, because my account and your account is different. Okay, lovely. M15 is going to close. It's about 8 minutes for the M15, so I think it's going to close with, okay, M5. Okay, what I can see in M5 closing, if this M5 closing with green, next candle you buy. Stop loss just put below this. Okay, stop loss put 32.88 or 89. It rising already. Okay, the reason I saw there's a divergence here. But if M15 closing with green engulfing candle, that is good. Okay, that's good. Okay, this is good as well. Rejection, the wick over so this is a H4 demand here. Okay, that's why it's rising. Sometimes, like I just mentioned, just be confident and just go for it, but with a smaller lot size. Hit the stop loss, that is okay. Just put the stop loss, take profit. You don't need to like bother so much. Just first thing, just ask yourself where your stop loss. That's all. Okay, take profit easy. Prioritizing any like money they give you, just close if you like rising 30, 40 pip or even like 20 pip, you close. That's okay as well. Okay. Okay, I will move on to another pair. I still have 5 minutes. Okay, shall we look at BTC?
Yeah, I think they are getting you a very good like the U green one.
BTC. Okay. BTC. Either they're going to week this week. If closing with rejection, I think they might closing with bearish divergence here. Okay, you might see the pullback, but let me see. Weekly. 200. Cross above. 100%. Okay, should be 100% right here. Let me just keep 100%. The reason I do like that because there's so many like either mess up my chart. Okay, I go to D1. Okay, in D1, the first of all, remember that I see that here they're closing with bearish engulf. So this is the zone for you to sell. Okay, for the D1 candle. Stop loss to put above this, the bearish the block here. Okay, but price rising. Here you see the rejection. Okay, we go down to H4. What do you see? Still within the zone. Okay, over here there will be people selling right here. Okay, within the zone here, there will be like 61.8% Fibonacci golden level here, right? You see the price action. Under the price action, rising again, rejection, and then falling to the either like pullback support level here, and now going back up again. So are you going to buy or sell here? There is no entry. Let me go down to the lower time frame. I will highlight another zone, the wick in the body. Okay. Can we draw a trend line here? There's a trend line here, bullish trend line. Price 50 and bounce off. Okay, let me go down to the lower time frame to see if I can sell BTC. Okay, look here within the supply in this race box. Okay, in the D1, right? Price rising in the lower time frame here. You want to zoom in. There's a reason for you to sell here. Price is either I put price is like break below, because if they want to make high, they shouldn't make a lower low, right? Rising here, either I will make I will mark out this my FVG. Within FVG here, I will use what? Golden level 61.8. This is the sell entry. Like when the price falling right here, right? You can see that, and then falling here to where first TP here, second TP here at the pullback. You can see that TP and go all the way down, right? So rising again. Now FVG is already done. I'm not going to highlight this my FVG anymore, but what I can do, I would highlight either this gonna be the another zone here with the wick and the bearish at the block. I will pull out. Okay, it's likely that price is going to make the divergence of rising to this zone and then falling to create the divergent bearish. Stop loss put above this high. I'm doing the evidence trade setup. Okay, there's the maybe divergence here. Wait for now, not gonna sell now. You have to apply to pull here, pull to this zone. Okay, pull to this zone. Within here, if price break above this one, this high, we can use the extension. So at least where pull back either here or here. Just monitor. No need to like chase the market or sell now. Okay, sell now. If you want to sell now, you just have to ask yourself, if price rising, you just might have like spare lot size. Okay, to put the sell here if you want to. Okay, the target where for the M15, TP1, TP2, around this level. Okay. Okay, that should be all for today, guys. Thank you so much for joining. Okay, I think I will end up with the thank you. All right. Okay, guys, thank you so much for joining. I will see you guys again next Tuesday. I can't remember the topic for next Tuesday. Okay, but anyway, I will see you guys next week for another educational session. Again, guys, if you have any question about trading, you can just ask me. Okay, I will just, if I can answer, if I know, I will answer. Okay, if I don't know, I will get back to you in the next webinars. Okay. Alright guys, happy trading, take care, bye for now and good luck. See you guys next week. Bye guys.